So Tyler and Mia, the first area that I want to focus on is risk management. So risk management, this focuses on evaluating your financial risks and determining measures to help avoid and manage their impacts. Now I understand that the unfortunate passing of your friend Brenda kind of prompted you in order to look at financial planning. So we're certainly glad you considered us and you realize maybe some of the implications of not being insured, such as not having insurance, such as like life insurance, can have a dramatic impact on your family. So the areas that we want to cover are homeowners insurance, property insurance, long-term care, disability, term insurance, health insurance, as well as umbrella coverage as well. So firstly, let's look at homeowners insurance. You currently have an HO3 policy with a $100,000 liability limit that provides replacement value on the contents through an endorsement with a deductible of $700. This actually provides a broad range of coverage and somewhat of a general affordability to this HO3 policy as well. We suggest making three changes here. We suggest increasing your liability, your personal liability, which will provide adequate coverage and will provide the flexibility to add an umbrella policy. We also suggest adding an inflation rider to keep pace with inflation and the overall value of the home, and increasing the deductible, which will make your payments more affordable. Plus, once we establish the emergency savings plan, this will allow for you to afford that higher deductible. Next area is property insurance, which is generally covered under your homeowner's policy. This will cover your furnishings, your golf equipment, jewelry, collectibles, lawn equipment, as well as your boat. A rider needs to be, so the rider was what we suggest needs to be added to the policy to ensure that your items are covered. A rider is an add-on to the policy that increases or amends the coverage terms. There are two options whenever you're considering a rider. There's one which is actual cash value, and the second which is the replacement cost. We suggest adding the replacement cost rider so that it covers $80,000 worth of your valuable items, such as your boat, your furnishings, and this will actually cover the replacement cost rather than an estimate. The next area is what we want to look at is automotive insurance, and currently you have a 100-350 policy on both vehicles. In addition, you have $100,000 in uninsured motorist insurance as well, with the deductibles of $500. While this does provide some coverage, we do suggest updating your policy to make sure that you're fully insured with the 250, 500, 100 policy to, like I said, make sure you're fully insured, as well as make sure you can qualify for the umbrella insurance. So that brings us to umbrella insurance. We understand that you were contacted in the past by an agent approximately 3 years ago to purchase a $500,000 policy for a premium of $175 per year. We suggest, since umbrella insurance is affordable, and to make sure that you, your family, and all your belongings are fully covered, we suggest increasing, instead of the $500,000, we suggest a $2 million policy, because this will insure you against the potential of legal fees, which can easily go well and above the $500,000 mark. Next, we want to review life insurance. So currently you have life insurance through your employers through a private policy, and you also have a policy that was sold to you by a friend who was selling whole life policy insurance. There's a difference between the two, which I've outlined in the financial plan. But what we suggest is canceling or terminating your whole life policy because typically whole life is considered more expensive. And we suggest purchasing term insurance for Mia in the amount of $150,000 for a 20-year policy, and Tyler 20-year term policy for $1 million, which will actually provide you adequate coverage in case one of you, unfortunately, if you were to pass away, and also to reach the medical. In order to reach the educational expenses that Becky may incur. So next area we want to look at is health insurance, which is currently provided for the family by Tyler's employer. Tyler currently pays $300 per month for this policy. And we actually feel like this is a great policy in that it provides a broad range of coverage at a reduced rate since it's provided by the employer, a group policy. But we would like to review the flexible spending account, so the FSA. So currently you already experience certain fees as well as like deductibles, like for healthcare and dental expenses per year. And what we've done is we've added these expenses up, which comes to $2,650. So we suggest making this contribution to your FSA in order to take advantage of some of the tax benefits that the FSA offers. In the plan, we have reviewed the FSA in detail, so that way you can understand some of the benefits as well as some of the drawbacks that the FSA can entail. Next is disability insurance. So the main area that we want to focus on with disability insurance is to make sure that Mia's disability insurance is portable, so that if she changes employers or quits, she is able to take that disability insurance with her. And it's also important to understand that own occupation or even modified own occupation, so that way it covers you in case you aren't able to perform the duties in your current role or the role that you were initially assigned to do whenever you were hired. But the main idea here is just to make sure the plan is portable. The coverage limits are just fine. Lastly, within regards to risk management is long-term care. This is an important area because this helps pay for many of the costs associated. Once you get older and you're not able to, you may not be fully covered by Medicare or Medicaid, and this covers nursing home care, home health care, personal adult care for individuals with chronic or disabling condition that needs constant supervision. So you've estimated that home care cost approximately $115,000 per year today, which we have taken into consideration, and the concern with maybe some of your family history, but we suggest looking at this once you reach the age, maybe mid-50s, so that way you both can be covered for the event that if you are having to be placed in a nursing home or need some additional care that Medicare or Medicaid may not cover. So next area you want to look at is expense management.